What if there was a way to make your money work for you without having to trade time for it? Imagine having your money grow while you're at work, sleeping, or enjoying time with loved ones. Sounds too good to be true? Well, it's not. The secret lies in understanding how money grows over time, and it's simpler than you might think. While many people spend their lives chasing after a paycheck, self-made millionaires know how to use their money to create more wealth. And today, we'll share the top 5 simple ways to make your money work for you. Whether you're just starting out or looking to maximize the money you already have, these strategies combine traditional financial principles with modern digital tools. Let's dive into these simple yet powerful financial strategies. 1. Automate high-yield savings. The first and simplest way to make your money work for you is by moving it from a traditional checking account to a high-yield savings account, HYSA, or a money market account. Most people leave their savings in a standard account, where it earns little to no interest. On the other hand, high-yield accounts offer significantly higher annual percentage yields, APY, making them a great tool for letting your money grow. By using high-yield savings, your money continues to grow over time without requiring you to do anything. Automating your savings ensures that a portion of your income is set aside automatically. This way, you won't have to worry about remembering to save, and your emergency fund can grow without you even noticing it. This method allows you to start building wealth without much effort, simply by utilizing the best banking options available. One of the biggest advantages is that compound interest works in your favor. You're not just saving money, you're growing it automatically. As your savings grow, you also benefit from earning interest on interest. Multiply your wealth with little effort. Even a small, consistent contribution can lead to large returns over time, making it an excellent tool for long-term wealth building. 2. Invest in low-cost index funds. Trying to pick individual stocks and time the market is a risky game. Instead of chasing trends, a more reliable method is to invest in index funds or exchange-traded funds, ETFs. These funds track entire stock markets or specific sectors, offering instant diversification and reducing risk. Rather than worrying about the daily ups and downs of individual stocks, index funds provide long-term growth. By investing in index funds, you automatically diversify your portfolio, spreading the risk across hundreds or even thousands of companies. Historically, index funds have provided an average annual return of 7 to 10% over the long term. This steady growth can add up significantly, especially when combined with the power of compound interest. The beauty of index funds is their simplicity and low fees. Instead of paying high commissions for actively managed funds, you can invest in a diverse set of assets with low management fees. The beauty of this method is that it doesn't require constant attention, making it ideal for those who are busy with their main jobs or daily life. By setting up recurring investments, you can take advantage of dollar-cost averaging DCA, which allows you to buy more shares when prices are low and fewer when prices are high. This helps reduce the impact of market fluctuations and ensures consistent growth. Additionally, since index funds reflect the overall market performance, they tend to recover from downturns more quickly compared to individual stocks. This makes them a safer and less stressful investment choice, especially for beginners or those with a low risk tolerance. The key to success with index funds is sticking with them for the long term, as they may not provide instant rewards, but will generate significant returns over the years. 3. Maximize retirement accounts with tax advantages. Retirement accounts such as 401k, and Roth IRAs provide a powerful way to grow your wealth while reducing your taxable income. Contributing to these accounts not only helps you save for retirement, but also allows your investments to grow tax-deferred or tax-free, depending on the account type. If your employer offers a 401k match, it's like getting free money. This match can be as much as 100% of what you contribute, which is an immediate return on your investment. Roth IRAs, on the other hand, allow your earnings to grow tax-free, and when you retire, you can withdraw your money without paying taxes on the gains. It's important to contribute enough to your 401k to get the full employer match. After that, consider prioritizing a Roth IRA, as it offers long-term tax advantages. Even small contributions can have a significant impact when you start early and allow the compounding to work its magic. These accounts are some of the best tools available for building wealth in a tax-efficient way, and using them consistently over the years can lead to a comfortable retirement. Additionally, many people overlook the power of contributing to their 401k even when they have a Roth IRA. By doing both, you can take advantage of both tax-deferred and tax-free growth, maximizing your wealth for the future. Another benefit is that your 401k contributions reduce your taxable income for the year, helping you lower your overall tax burden while simultaneously saving for retirement. 4. Utilize real estate crowdfunding. Real estate has long been one of the most effective ways to build wealth, but many people believe they need hundreds of thousands of dollars to get started. Thanks to platforms like Real Estate Investment Trust REITs and crowdfunding, you can now invest in commercial or residential properties with as little as $10 to $1,000. This democratization of real estate investment opens up new opportunities for those looking to diversify their income streams. Investing in real estate through crowdfunding allows you to earn a share of rental income and property appreciation without the hassle of being a landlord or managing repairs. Plus, real estate typically provides a hedge against inflation, making a reliable source of passive income that grows over time. With these platforms, you can diversify your investments in different properties and markets, spreading the risk while increasing your potential returns. Real estate crowdfunding has made it easier than ever to get started in this lucrative asset class. Whether you're looking for short-term income or long-term wealth building, real estate can provide both, making it an essential tool for any investor's portfolio. Moreover, real estate investments often have relatively low correlation with traditional stocks and bonds, making them a great way to diversify your portfolio further. The rental income can be a stable source of passive income, while the property's value typically appreciates over time. As a result, this can provide a steady and reliable income stream with less volatility than other investment vehicles. 5. Dividend reinvestment programs, DRIPs. Dividends are another powerful tool in building wealth passively. When you invest in dividend-paying stocks, you receive a portion of the company's profits, which can be reinvested to purchase more shares. With dividend reinvestment programs, DRIPs, you can automatically reinvest your dividends without needing to manually buy more shares. By using DRIPs, you can take advantage of the power of compounding. Every time you receive a dividend, it's used to buy more shares of stock, which in turn generates more dividends the next quarter. This cycle repeats, and over time, it can lead to exponential growth in your wealth. Investing in companies that have a long history of paying dividends, known as dividend aristocrats, ensures that your passive income stream remains reliable. These companies are known for their stability, and their long-term commitment to paying dividends makes them a safe bet for anyone looking to create a steady stream of income. Whether you're new to investing or a seasoned pro, dividend investing is a simple yet powerful strategy for building wealth over time. In addition, dividend stocks can act as a consistent income stream, especially for those who are in or approaching retirement. This allows investors to have a reliable source of cash flow, which can be reinvested to continue growing their portfolio or used to cover living expenses. With DRIPs, your money works harder for you, compounding returns without requiring any additional effort on your part. These 5 simple ways to make your money work for you combine traditional financial principles with modern tools to build long-term wealth. By automating your savings, investing in low-cost index funds, maximizing tax-advantaged retirement accounts, leveraging real estate crowdfunding, and reinvesting dividends, you're creating multiple streams of passive income that grow over time. The key to financial success isn't about working harder. It's about making your money work smarter. Stay consistent with these strategies, and over time, you'll see your wealth grow. So, which method will you start with today? Let me know in the comments. If you enjoyed this video, don't forget to hit the like, share, and subscribe buttons. Keep building that wealth, and see you in the next video.